Welcome back to Squawk Box. The top 1% of Americans seeing their wealth grow to record levels so far this year. And Robert Frank is at the table. How much is this wealth growing?
What are we going to do about this?
Well, hopefully we'll keep having the stock market go up and create even more, Joe.
I think it's good.
And distribute it to even more people.
I think it's good, but you know, there are some people that are going, oh.
People can be very proud about paying their taxes as it goes up. Yeah. How about that?
Well, they do.
And there's one fact here that everyone is going to love. So we're going to start with the top 10%. They added over $5 trillion in wealth in the second quarter, driven mainly by stocks. All wealth groups, that's every wealth group in America, saw gains in the quarter, with the bottom half of Americans also adding about $150 billion to their wealth. That was just in the quarter. The fastest growth, of course, is at the very top. The top 0.1%. So those are folks worth $46 million or more in total assets. They've seen their wealth nearly double since 2020 to over $23 trillion. Stocks accounted for virtually all of that growth. The top 1% own half of all individually held corporate equities and mutual fund shares. The top 10% own 80%. That share has remained fairly consistent. The top-heavy wealth creation has led to a top-heavy consumer economy. The top earning 10% accounted for a record 49% of total consumer spending in the second quarter. That's according to Mark Zandi at Moody's. Now, any deep or prolonged decline in stocks could have a large reverse wealth effect on those big spenders and pose a threat to the economy, he says. For the full breakdown of the changing wealth population and the winners in the luxury economy and wealth management from all this wealth that's being created, you can sign up to the Inside Wealth newsletter, out tomorrow at cnbc.com/insidewealth. That's cnbc.com/insidewealth.
When you were showing that, all I could think of was trickle-down economics. I don't know if that's what's supposed to flow to mind, but big money flows downhill and ends up lifting all boats. But then there are those who say focus on the trickle part of that.
You said 150 billion versus 5 trillion, so you'd immediately say that's terrible.
Okay,
obviously, income disparity, wealth disparity is increasing. But both are up, and it's 150 billion more, and I don't know what you do.
All of this is paper.
You look at it as rising tide lifts all boats, but it's also
setting aside the debate over inequality, whether it's right or wrong, the more important issue is that we now have a consumer economy that is highly dependent on a top group of consumers. Right. Those consumers are dependent on the stock market. The stock market is dependent on a very small group of stocks that are dependent on whether AI has the demand that people will expect in the coming years.
That is a good way to.
So I think all this is built on very narrow pillars, and that's why I think
we should be a little
nervous. Not so much whether inequality is bad. It's that we have a very fragile foundation right now for both the stock market and the consumer economy.
And the journal points it out that people think that. But we also had just points in time, admittedly, but a 3.8 on the GDP number.
Yeah.
Low unemployment. I would just, I mean, I can't imagine my Twitter feed about Trump. If the market was down under him since being elected or down this year, I just can't imagine what they'd be saying. Because what they're saying right now is beyond belief about it. Think if things weren't going well.
Here's my question to you. All this, I mean, the majority of this is on paper.
Yes.
Right.
Although with IPOs and SPACs coming back, we are having liquidity.
Is it ever not on paper? If it's stock market?
No, it's oftentimes on paper. But then the other thing we've talked about is that the new rich, if you will, don't pay taxes because they take loans against the paper. And that's a real issue. And as this number keeps going up, it puts you in a different sort of tier where you actually can pull that off.
The only time it's not paper is when you've sold it and put it into Bitcoin. Then it's
the only thing to add to that, Andrew, is that capital gains collections, revenue collections, are also up. Right. So there are taxes coming from.
Right, but the question is, okay, let's do a segment on this. I'm curious.
Okay.
The distinction between the wealth going up and how much in taxes? What's the difference in terms of the ratio?
Proportion.
The proportion.
And the rate of change. I will find that out.
That I'd be very curious about.
And we'll do that segment.
Although after tax cuts, we have seen revenues go up because so many things in the stock market did go up, and there were higher tax revenues. Were there not higher tax revenues?
Right, you may not see it.
There were
higher tax revenues after the tax cuts because things went up.
Right, yes.
But I will look into that.
I'm very curious.
We'll do the segment.
I'm just curious.